Good morning, everyone, and welcome to the Ankerstar Wealth Morning Show. I'm your host, Allison Ankerstar, and today we'll be talking about yesterday's Fed move, investing in SpaceX and the other pre-IPO stocks, and finally, how high-frequency traders make money. But before we begin, as a reminder, this is a financial education presentation and should not be construed as personal financial advice. Full disclaimer information is available at ankerstarwealth.com. Good morning, Steve. The Federal Reserve raised rates at a quarter point yesterday. What did Chairman Powell say in the press conference afterwards that moved markets higher?
Hey, good morning, everybody. Sorry for the cough ahead of time. One thing, we're in the middle of Ice Mageddon here in Texas, and with that, schools are closed. Well, the urgent care clinics are also closed. So I'm about 2 days overdue for going in for some cough medicine that can take care of this ridiculous cough I have. But the show must go on. I didn't want to not do another video, but I think this will be it for the week. Probably will not do one tomorrow. We shall see. But hopefully I can get in today. Okay, the question at hand is what happened yesterday. We've been waiting on this Federal Reserve meeting for basically since the beginning of the year, because so goes January, so goes the first Fed meeting, so goes 2023. And obviously the market celebrated it. The market didn't know what to do right after the announcement, right? Because it actually went down first and then went screaming back higher. And then you're looking at the futures here, NASDAQ up over 2%. Well, you see the Dow that finished down yesterday is only up 0.12%. So what is the signal? The signal's a return to technology. Technology was beaten up terribly in 2022. So it's got a lot of comeback potential, and that's happened so far. I think NASDAQ's up like 13% this year now after yesterday. So crazy that they reacted that way. But also expected, right? Because we knew tech was coming back. You just don't know when. That's why you can't really time the market. But tech is making its comeback. You still have, right before the Fed announcement yesterday, you have the big short guy. Sorry, brain's a little foggy this morning. Michael Burry. I don't think that's exactly right. But anyhow, the big short guy came out and he tweeted at the whole world sell right before the Fed announcement, and market screams higher. You have Ray Dalio right here. If you follow him at all, cash is more attractive. Okay. Yeah. People have their stance on life and they say it no matter what evidence they're facing, right? But obviously the real world operates on the fact that the Fed did exactly what they said they were going to do yesterday. They forecasted it. So if you kind of rewind the tape a little bit, last year we did 4 75 consecutive basis point rate hikes. Then we did 50, and now we did 25. And way back when they said they were going to do 75, 75, 75, 50, 25, and pause. Guess what? They've done that. And everybody's expecting that pause, meaning the next rate hike in middle March, they're not going to raise rates. They'll stand pat. So that's what's expected. Now, the question Allison asks is, what did Federal Reserve Chairman Jay Powell say yesterday? Well, he said everything, which is kind of interesting. So if you were to say, hey, who's going to win the Super Bowl? And you answer both teams, right? Or it could be a rare chance. It could be a tie or something could happen and it gets weather. He basically, at the end of, they make the announcement, and they, about 1-page document goes out to everybody real time. After that, he said, the first thing he said was, well, we're going to continue to raise rates to battle inflation. It's like, okay. That's the hardline stance, right? That's what he always says. But then he also said later on that the Fed has no intention of raising rates to 5% or higher. Well, the rates right now are 4.75. So that comment means that they're not going to raise rates anymore. And then lastly, he said towards the end that he doesn't plan on decreasing rates anytime in 2023. So what? Now, you know that I've always said we're going to overshoot to the upside and then have to correct right away. Well, we're actually kind of on schedule. So I'm kind of proud of the Fed there. They've done exactly what they said they were going to do, which means the markets have handled it well. So maybe we don't overshoot to the upside and have to correct, but he thinks we're going to go up and pause and everything is going to be good. If that's the case, that'd be great for the markets. Of course, the day when the Fed drops an interest rate, whether it's in 2023, 24, 25, 26, 27, that is a huge rally that's going to spark, 20% gains for several years, right? Because that's what we saw coming out of 2007 through 2009. So overall, what's my take on this? A lot of people are ready to snap and go full on aggressive. I think you still need to wait and see a little bit. The market celebrated it yesterday. They're celebrating this morning. I'm not sure that holds. I think that's a little bit of irrational exuberance, if you will, to borrow a term from the past. But I think we need to wait to see for some more inflation numbers, some more unemployment numbers, and we still. The inverted yield curve predicts a recession. A lot of people are expecting the mother of all recessions coming up. So I don't think it's necessarily time to go full risk on. We're not in the clear by any means. We're not at a lock and load moment. But you certainly, if you're on the sidelines, you start putting money back to work for sure. If you're staying at the kind of risk on where you still have buffer and king and all those things in your portfolio, I think we need to hold that for a little while longer before we can rip the Band-Aid off and just scream higher from there.
Next, what can people do to invest in private companies like SpaceX?
Okay, so SpaceX obviously is probably the hottest company out there as far as potential, right? Here's their website. I'm not trying to I'm not backing them, or I'm not trying to endorse them by any means. So just answering the question. So to try to get on a private company, sometimes you can't. That's the first thing. Other times they offer pre-IPO shares. So if you want to get in on the company on the pre-IPO phase, first of all, the company has to be issuing shares. Okay. They tend to issue those in waves, and right now SpaceX isn't open for new investment. But you have to go through a company like Equities, also not endorsing them, but I do have an account, and this is where I'm sending folks that want to invest in pre-IPO stuff. So the opportunity is there. You do have to be an accredited investor. So if you don't know what that means, you're probably not one. That's not to be sassy. But you have to have a salary of $200,000 for 2 years or $300,000 for 1 year, or have investable assets north of $1 million, and that doesn't count your home. Those are true investable assets. So to prove you are accredited, you have to have somebody like me come in, a financial advisor come in and put a letter on your behalf saying I've verified it. But once you are accredited, then you can hop into stuff like this. It's obviously high risk. You have to be prepared for things to go to zero. I mean, none of us expect SpaceX to go out of business, but 2 or 3 rockets blow up in a row and they're done, right? So you have to be prepared to kind of lose everything, which is different investing than normal stock market investing, where you can cry it out for your account going down 15% in a year, but it didn't go to zero, right? So but to do this, there's a bunch of paperwork that's involved. You have to sign your life away as far as liabilities and things, but it does allow you to get shares pre-IPO. And then, of course, if the company IPOs, then you get those transferred into public shares. So pretty cool way to make a lot of money. It's also a way to lose a lot of money if the company doesn't make it. So super high risk. That's why you have to be accredited. If you want to walk down this road on your own, you're going to need to do a lot of self-study. If you use an advisor like myself, then we can help walk you through it, let you know exactly what you're signing, sort of thing. So the opportunity's out there if you're interested in SpaceX or Starlink or anything else you happen to hear about. Reach out. I can have somebody on the crew do a little bit of research to see if the opportunity's there, and if we can get you in on it.
Last, how do high frequency traders make so much money?
All right, high frequency trading. We'll start, first of all, what is it, right? So this is these people that they call what's called scalping the market. There's, buy and hold investors, there's traders, there's active, passive, there's day traders, and then a subset of day traders are these high frequency traders, where they buy something and then turn around and sell it for a fraction of a penny, higher or lower, betting on which way it's going. And they're scalping that, percentage out. But you're like, well, what's an eighth of a penny going to do for me? Well, a lot if you stack up like 5 million of those eighths of a penny, right? I can't do math today, so I'm not going to try, but that's a lot of money, right? So it's a big game, if you will. Now you can lose lots of money too. Obviously, trading is a zero-sum game. You are not creating money out of thin air. So if you're making it, somebody else is losing it, right? Or a lot of other people are losing a little bit. But this is the land of complex algorithms. You see this around. The reason I want to wait until today to kind of talk about it is you see this around the Fed news. So you can design an algorithm to, as soon as the Fed drops their paragraph as to what they're saying, your computer can analyze it and based off of keywords and stuff, immediately start placing trades on your behalf, based off of what's in there faster than any human can read it and act on it. Right. So doesn't have to be Fed news, could be any news, earnings, anything like that. Headlines, anything you can set your algorithm to. Right. So obviously very smart people in the space that execute millions of orders and scan multiple markets and exchanges in a matter of seconds. So so how can they do that? Well, first of all, if you are a day trader, once you qualify, you place a certain number of trades in a short period of time, you get pattern day trader status, which means you have four times your buying power. So if you have 100,000 in an account, you can swing a $400,000 bat, if you will. And once you have that, each trade can be up to $400,000, even if you're in and out of it multiple times. So you can sit there and swing that bat multiple times. So you don't need a lot of money to be able to move millions, if you will. So there's a huge tax consequences of this. You can file a certain form to be a day trader, so the wash sale doesn't apply to you. So if you're ever going to do that, you need to file that tax form before you start. Otherwise, you're going to have ghost gains and all a bunch of stuff which I've talked about in the past. But what's the advantage for the rest of us, right? Well, this is what keeps the bid-ask spread low for a lot of stocks, and it keeps volume in the market. And when you're trying to sell, 5 shares of Apple, that doesn't matter, right? When you're trying to sell 5,000 shares of Apple, it does matter, right? So for those of us that are, swinging an institutional bat, if you will, we're moving a lot of stock at one time. It's nice to have the traders in there providing that liquidity, right? So it reduces that big bid-ask spread to a penny. So, or less than a penny. Okay, now, if you want to read one of the more interesting books ever, this came out. It's called Flash Boys. It's by Michael Lewis. I want to say it's 2012. I don't see the exact 2014. I read it back in the day when the business was small and I had far less to do. But it is really talking about the speed of your connection and how these people did it, right? So it unpacks it to the nth detail. It's worth, getting a used paperback for $4 or whatever it is on Amazon. But an absolutely great book. I don't think it was ever made into a movie, even though they probably should have, but it's a little bit techie and nerdy. So that's probably why they didn't. It's not nearly as interesting as The Big Short. But if you want to know more, Flash Boys is the way to go. You can read all about it to your heart's content. If you're going to try something like this, just realize it's a zero-sum game. You're entering a world where people are very good at this. So you either need to get very good, which is possible. Anybody can do anything. I believe that. But just realize that before you get in here and dork around, there are some real pros in this space that you're competing against on a daily basis. So good question. Thanks for the person that reached out and asked it.
Thank you, everyone, for your questions. Please submit your questions as a comment through social media or directly to our email at vipservices@ankerstarwealth.com. And don't forget to like and subscribe to get daily updates. That's all we have for today's show. I'm Allison Ankerstar. We'll see you back here tomorrow.